people get in the mindset, you've obviously a lot more, I mean, how many door-to-door people do you think you've serviced over the years in finance?
10,000.
Yeah, like
12,000.
crazy, like
Yeah.
it's no new world. Like it's so funny. I had a guy call me the other day and he's like, "Hey, I need a new tax person," and I was like, "Well, what are you looking for?" He's like, "Well, I'm door-to-door specific, a little bit more aggressive," and I was like, "Oh, cool, go these guys." I sent to
Yeah.
your website or whatever.
Yeah.
And but I think that there's difference between any other normal accountant that's like, "Hey, I've been looking at the books of Leatherby's versus the books of a door-to-door sales 1099 independent contractor," but one of the things that you dealing with these people all the time, you probably hear the same phrase, and I want to talk about this phrase. "Oh, let me buy that. It's a tax write-off."
Mm-hmm.
Because they're these young 1099 cats. What do you say to that person who's like, "Oh, I'm just going to buy this truck, or I'm going to buy this, I'm going to buy these clothes, I'm going to buy this computer because I want it, and it's a tax write-off."
Typically, we get real quick. So
Yeah.
we get people at the dealership calling us saying,
Yeah.
"Hey, should I buy this truck or should I buy this vehicle?" And we're like, if you're going to buy this supercar or this, Mustang or whatever it is that you're going to buy, it's probably not going to give you a good tax deduction. So, yeah, go ahead.
Yeah. So
Yeah.
what he would say is you need to tax plan prior to
Yeah.
going to the dealership. So, I'm always available by anytime they can go into Calendly, book with me. It's $50 for 30 minutes. And I basically will sit with them and coach them on exactly what do you need that vehicle, not just for tax purposes, but I can talk through them, see what else they have. I know about door to door. I know about recruiting. And I can say, look, yeah, right now you don't need that. If you make this move instead, you're going to compound your net worth instantly and put yourself in a spot for next year to where you can then compound again. If you compound year after year your net worth, before you know it, you're able to get these massive loans from banks. And why wait? Why wait and do that 4, 5, 10 years down the road when you could make it happen in 3 years?
Yeah. And we typically don't recommend somebody make a purchase and spend money on something they don't necessarily need unless it's going to be some sort of tax benefit. Because some guys think that something is a tax benefit that's not.
Yeah.
And they justify stuff they don't need because they
Yeah.
just want it.
Yeah, it's true.
Yeah.
And how often do you see people building liabilities versus
Mhm.
building assets?
Yeah.
Totally. Yeah.
Yeah, the saying is don't let the tax tail wag the dog. And that just means don't do something just for the tax purposes as far as spending money. Because, yeah, I might be in the, you might have 37 to 42% total taxable rate. But does that mean that it's good for me to go spend 10 grand on something that's going to be worthless in a year? No, I'm still losing that additional 5,800. Sure, I get the $4,200 expense, deduction, and it saves me that much, but I'm still out 5,800 because that's going to be worth nothing in a year. And there's many things like that where you own it for a year and it's not worth anything. Now with trucks, that is the one area where I might say, look, let's go over your numbers. Okay, you're at 150 in taxable income. You want to get rentals next year? Okay, well, so let's not go any lower than 150, but let's buy a $80,000 truck. If you buy a $80,000 to $100,000 truck, we're going to lower your taxable income from 150 down to 70 or 80,000, and now you owe 15,000 less in tax, but for purposes of getting a loan, you still show 150K in profit because you add back that depreciation.
So same thing with real estate too. I think a lot of people, the fear is, like real estate, like I showed a very negative real estate
Yep.
income this year.
Yeah.
And and you're like, well, how am I supposed to qualify for loans? It's like, well, no, that's all because of the
Depreciation.
tax
Yeah.
depreciation.
Yeah.
And they don't account for that. So
Yeah.
that's something very important for people to know.
Totally.
Yeah.
But then the opposite, let's go the opposite of that. The first time I was trying to get into real estate, I was like, hey, I want to go get a loan. And I had for 2 years written off everything.
Yeah.
I paid like $200 in taxes.
Yeah, exactly.
I was
Yeah.
like,
Yeah. No,
Yeah.
same. Like right when I started, same thing. Yeah.
Yeah.
So talk to us about that. Like, what
Yeah.
is that? What typically happens with a sales guy when they're trying
Yeah.
to get into real estate? How do they handle
Yeah.
taxes?
And I think that's why we typically say, come to us with your 5-year plan of what are your goals moving forward? Because a lot of guys, they're like, I just want to save as much on tax as possible. But they're not telling us that they want to get into a property the next year, and they're not going to be able to show enough income Now you could put a bigger down payment, but most likely you're going to need a credit partner or a partner who has,
Cosign.
a cosigner. And that's tough for a lot of guys because they don't want to do that. But sometimes that's kind of there's pros and cons either way. You can pay way less in tax and keep money in your own pocket, or you can pay a little bit in tax and show more income for the bank, so that they're like, okay, well, I can put you in a townhome or a first rental property or something. So,
What
But-
is the number? Do you know kind of numbers off the top of your head of like, I need to show I make 60 grand in order to get a 200,000 on property?
Yeah, I don't-
400,000?
Around 40,000 on W-2 income to get 200K. But remember, these guys don't have W-2 income other than the small amount they get from their S corp paying themselves, and they're going to disregard that W-2 income. So you need to have 2 full years of S corporation income or 1099 income of in the 60K profit range to get the 200K.
Okay.
So it's not easy when you
which
are
in
on
Utah that gets you
1099.
basically
That gets you
nothing.
nothing.
Yeah.
Yeah.
So you need to show to get a $400,000 house.
Yeah, 80 to 100K. It goes up quite a bit, quite fast. So yeah, 80 to 100K, you're in a good spot.
But when you start putting money into things like solo 401ks and you put money into, if you do buy a vehicle, that money is still showing. And
Yeah.
if you put it into a retirement account, then it's still liquid.
And
The bank
collateral.
likes that
Yeah.
because then it is collateral.
Okay,
So,
you
yeah.
can plug into that.
hmm
So let's talk about, like you just said, S corp, 1090 or LLCs, and like one of the main strategies for 1099 paid person is kind of setting up an S corp. What does that mean? What does
Yeah.
that look like? What does that do?
Yeah. Okay. So an S corporation. Yeah, that's basically all. That's been my life for the last 10 years.
I was going to say, to you, it's
He
second
loves
nature. To
this
everyone else
conversation.
listening to this,
Yeah.
they're like, S
Yeah.
corp? So if you're new
Yeah.
to sales
That's
and
awesome.
if you've never heard this, this
Yeah.
is a very important lesson.
Yeah.
It's super, super important because, yeah, if you profit over $4,500 in 1099 income, that's nothing, right? If you profit more than that, you're guaranteed to save money by having an S corp, even after paying all of our fees to set up, even after paying a year's worth of fees.
You
us.
cross the
Compared-
break even point.
Yeah, compared to going anywhere else, even if they do your taxes for free using any other strategy, other than, if they're lying, we can't beat that. But
Which happens.
yeah, that does.
Which we
happen.
don't condone.
Yeah, we don't condone.
Yeah.
So, but yeah, an S corp was created by Congress to create something that would help to stimulate the economy. So they're saying people don't want to start a business because the taxes are way too high. So let's make a new type of business that will entice people to start a business. So they said, yeah, S corporations will pay 0 self-employment tax. That was at first. Then everybody and their dog started setting up an S corp that was self-employed, and the IRS said, okay, this wasn't really what we had in mind. So now we're gonna make it so every self-employed single member LLC S corp has to have at least one employee. That employee would be yourself. So like mine is quote Kermie and Piggy, kind of a silly name for me and my wife's LLC. But yeah, I'm the employee. So if I made $100,000, I'd have to pay myself a $20,000 wage. Now I pay self-employment tax on that wage of $20K instead of on the $100K.
And what's the difference in tax bracket and percentages on that? To kind of put an example. So
Yeah. So the self-employment tax is 15.3% no matter what. So
that's 15,000 something and 100,000.
yeah,
Or
or you can do $3,060 total.
so I just saved myself
12 grand.
12 grand
12 grand.
by
Yeah.
just restructuring your LLC.
Yeah.
I didn't have to buy a truck to save 12
Nope.
grand. I didn't have to go spend that. Like
Yep.
it's just restructuring.
Yeah, being set up correctly. Yeah.
So give that 12 grand to the government. We'll pay these guys to go help
Yeah,
you set
exactly.
that up.
Now you're going to show less income at that point, so that's something to consider. But we can adjust because after your expenses, then it'll show how much income you have, right? And so you'll have the wage that you paid yourself in addition to any what are they called, distributions or
Yeah.
dividends or
Yeah.
whatever's left over after expenses.
That's what
So-
makes tax planning by far the most important thing that we do.
Right.
If you don't tax plan, and most of these guys go, well, I'm not doing tax planning, it's $50. And, that just makes me sick, really, because
No, pay the 12
It's
grand
like,
more that
yeah.
Yeah, exactly. Yeah.
they tip $50 to their waitress, when they go out to eat to look cool in front of their friends, but they won't pay me $50 to tax plan and save them 10, 20, 30, 40, 100,000, 200,000, whatever it might be. So to me, it's a joke. You've got to be paying for tax planning, whether it's an hour, a year, or like most of my clients that make over 100K, they'll do 30 minutes to an hour a month or every other month with me. That way, they're not only getting tax planning, but coaching. And I coach them on how to compound their net worth faster than anybody else could tell them how.
That's awesome. That's
Yeah.
why I'm taking you up on that.
Yeah.
So that's good.
It's something that we,
Right?
COS is only a year old.
Okay.
So it's something that we recently started offering in the last like 3-4 months.
Oh, cool.
But it's really picking up steam, especially with our podcast, the Compounding Interest podcast.
Go check that
Coming
by the
out.
way.
Yeah, we should have it posted here real soon. But we've shot the first 2 episodes, and
3 episodes.
3
Yeah.
episodes. We do another
Yeah.
one tomorrow, and with that coming out, I think it's going to help, hopefully, open the eyes up to people and see the value of, compounding your net worth and planning.
No, I
So.
so I'm with my buddy the other day, and now that we're talking about compounding interest, and one of my favorite books is The Compound Effect,
Mhm.
Exactly.
and close friend, like childhood best friend, in his house, and he's like, I've got this house is my an investment, and then I've got some Robinhood money,
Mhm.
but I was like, how much do you have sitting in the bank account? right now?"
Yeah.
And he works with it, and
Mhm.
he's done well, and he's like, you don't want to.
What?
He's like, what do you mean? He's like, well, couple 6 figures. And I was like, you have like what?
Yeah. Why are you not
And-
putting that
and
into
we've
something?
We've
Yeah.
been side by side throughout this journey a lot. Like I got him into Vivid in 2011.
Uh-huh, yeah.
You know what I mean?
Yeah.
Like it's been a long time.
Uh-huh.
And I just remember I was always like, how do I put my money to work? I said, guess how much I have in my bank account? 12 grand, maybe 6.
Yeah.
I don't know.
Yeah.
It goes from 6
It goes
to
up
4.
and down. Yeah. Yeah.
I
Exactly.
was like,
Yeah.
he's like, what? I was
Yeah.
like, if I have more than $20,000 in my bank account, I want to
Mhm.
I'm like, ah!
Yeah. Buy a house.
Yeah,
do
like,
something.
do something.
Yeah.
And he's like, well, maybe I just study, in case of a rainy day. I'm like, what kind of
Yeah.
rainy day could hit you
Yeah.
that would do anything to that?
Well, and it's
Yeah.
it's funny because the closer I've gotten with Zach, the more he's like, okay, we're gonna put money into this, and then we're gonna put money into this, and then we're gonna put money into this. Like in his mind, he already has planned out how every dollar, basically, besides like our living expenses, is going. And it's a huge benefit having a friend who understands tax. And again, the goal is to emulate the wealthy, but not just in the earning potential, but in the saving potential. And that right in their on their right hand is their tax attorney or their accountant, right there telling them exactly how to save and spend their money.